In this lesson, we're going to be talking about short-term perspective, a New York session bread and butter model. So we've had that long-term perspective, that intermediate term perspective, right? And now it's time to dive into an actual entry model. So short-term perspective. Let's think back to the previous lessons, right? That long-term perspective, the why price should go to a specific level. We know how to do that right now. Then we had that intermediate term perspective, right? How price will get to that specific level. And now we're going to be talking about that short-term perspective, which will be our entry for our execution and the trade. So obviously we're going to talk about a specific time window, which is going to be 8 a.m. EST to 12 p.m. EST, and this is the kill zone for this model. And we got to do a little shout out to the currency merchant for the logic behind this time window. So thank you, the currency merchant. The New York session between 8 and 12 is the bread and butter time window of the daily range. It's the sweet spot in the daily candles power of 3, right? That open, high, low close for a bearish candle, or the open, low, high close for a bullish candle. Between 8 and 12, price only does two things. We either have a continuation pattern or a reversal pattern. So 8 a.m. EST to 12 p.m. EST is our kill zone. Now at 9 a.m. and 10:30 a.m. EST, usually that is the sweet spot in the kill zone for reversal days, for the reversal pattern. So we'll outline this in the charts coming up and we'll see how that is formed. And then we have 10 a.m. to 11:30 a.m. This is when London was a extremely large range, or we have a red folder at 10 a.m. Now, continuation days. In a New York continuation, we want to have seen London go below or above midnight opening price to accumulate for the daily range, right? So smart money accumulates sell orders above this New York midnight opening price, right? To continue down lower during the day, and vice versa will accumulate long orders below that New York midnight opening price to go for an expansion higher. So at 8 a.m. we delineate a vertical line, and when we look left for failure swings, right? Remember back into the core concepts, we've got those LR signatures, low resistance liquidity runs, right? Failure swings, equal highs, equal lows, trend line, and all that kind of stuff. The only two options for framing a trade between 8 and 12 are premium or discount array retracements or stop hunts. So on reversal days, if we are bullish, we want to buy below the opening price at midnight, right? And if we are bearish, we want to sell above the midnight opening price. So at 8 a.m. we delineate a vertical line, and then we look left for those failure swings, right? Those LRLR signatures. Then we think back about core concepts, right? Failure swings, engineered liquidity, equal highs, equal lows, trend line phantom, and all that kind of stuff. Now, what are we targeting? We're going to be targeting previous daily high or low, right? The easiest draw on liquidity, Asia high or low, or London high or low. The only two options for framing a trade between 8 and 12 are premium and or discount array retracements or a stop hunt. So now we also need to know when to avoid New York session, right? So when do we want to avoid New York session? When London is an extremely large range. And why do we avoid it? Because most of the time the daily range has expanded already, and New York session then tends to consolidate or accumulate or go into like a short-term seek and destroy profile, right? There's no juice anymore in the market and targets have been hit already. Also, when we have a red folder later in the afternoon, like FOMC, most of the time that is at 2 p.m. EST, right? And then the day before news events such as NFP or CPI. All right, we've got a crude depiction for our short-term perspective bread and butter model, right? Remember, time is very important, so we're going to be looking for that setup in New York kill zone 8 a.m. to 12 p.m., right? For that continuation or reversal. Now over here, we've got a continuation pattern, and basically what you're looking for is a premium and discount levels. So you draw out your range, right? If you're looking for shorts, you're looking for a premium array, obviously. So that could be a 1 hour or a 15-minute POI. And you can see drawn liquidity over here is lower, and we wait for our price action to go into that premium array and in that specific time zone. That is very important, right? Now, looking for liquidity, very important. We look for those failure swings, right? We can see those failure swings down here, another failure swing down here, and then that smart money reversal happening in our POI. That's what we wait for, and then the setup will form in our sweet spot from 8 a.m. to 12 p.m. Now, what is option 2 in the continuation? So we either hit a higher time frame premium or discount array, right? Or we look for that stop hunt and then continuation lower into our drawn liquidity. So basically we go back to that sweet spot, right? 8 a.m. to 12 p.m. EST. We see structure breaking down. Again, looking for liquidity. We see those failure swings, right? We want to have that low hanging fruit, that easy target. So when we break down, we have a clear draw on liquidity and continue down into those lows, right? We have that stop hunt on the 1 hour or 15 minute, right? So we know we think back about order pairing, right? On the core concepts, we order pair down up here, and then we continue down lower breaking structure, and then we have that continuation between that 8 a.m. and 12 p.m. time window. Right, let's talk about that reversal pattern. Now, this looks like a market maker buy model, right? We have that original consolidation over here, and also we always draw out our New York midnight opening price, right? Because we want to be a buyer below this this timeline, right? The New York midnight opening price, and we want to be a seller above it. So with a market maker buy model, we identified that original consolidation. We've got also those equal highs, right? Or failure swings up here. So we have a clear draw on liquidity for this one. And then we wait for that discount array to happen and that specific time zone. So 8 a.m. to 12 p.m. This is where the reversal can occur. So over here we hit that array, right? The discount array. We break structure up inside the kill zone, and then we're going to be looking for our setup. So same structure over here again, right? Only one difference, it's the time window is extended to the right a little bit further, right? Because then in late London we hit that discount array instead of that New York kill zone time frame. Now this is fine because we can still catch an entry because we wait for that specific time window, right? We know break of structure and a discount array has happened already, so that sweet spot should be hit within our kill zone, and then we still have that market maker buy model which we can complete. Right, so over here we've got a Euro USD 15-minute chart. Now, what do we want to do first, right? We want to delineate our New York midnight line, right? We've got that on the chart until 12 p.m. EST, right? The end of the New York kill zone. So what do we want to do at first? We want to draw out our New York opening price line, right? Because we want to be sellers above and buyers below that, right? We've got that line outlined over here. So we can see price is starting to accumulate above this New York midnight opening price. And why is it doing that? Because smart money wants to accumulate their short orders, right, to continue down during the day. Now, let's think about what time zone this is happening, right? We've got London open kill zone, right, 2 a.m. to 5 a.m. And think about London. London almost always creates a high or low of the day unless we hit a higher time frame POI where we can have a reversal, right, during a New York session. But accumulating short orders above that New York midnight open price over here, and then think about order pairing, right? From the core concepts, we've got that order pairing above those buy stops, and then they drive price down lower during the London kill zone 2, breaking structure lower, and then for us we wait for that specific time frame, right, at 8 a.m. to 12 p.m. EST for that New York kill zone. So outlining a vertical line from 8 a.m. and then from this point on we're going to be looking for low resistance liquidity, right? And or we're going to wait for that higher time frame or that premium discount array to be hit, or we wait for that stop hunt, right? So two things: we hit a premium or discount array and then continue our way down, or we're going to wait for that stop hunt. Now, do we have news, right? We need to see, always keep an eye on that economic calendar. We've got 10 a.m. consumer sentiment. So highly likely what we just talked about, right? You want to have that 10 a.m. to 11:30 a.m. as your sweet spot for looking for a setup. If we don't have high impact news at 10, we can do it from 8 a.m. already. So in our specific time frame over here, we wait for either a stop hunt or a premium retracement, right? So what happens over here? We've got that 10 a.m. news, right? Price drives up and does a 15-minute stop hunt, and after that we can look for our setup, right? So this time we did a stop hunt instead of a premium retracement, and we kind of also went back into this fair value gap, right? That's a premium array. So from that 15-minute chart, we dive into that 1-minute chart, right? We've got that 15-minute stop hunt, and again, think about order pairing, right? Their buy stops are paired up with their sell orders, so price drives lower and lower and lower. And from this point out, we want to see all bullish candles being support for lower prices, right? We got that bearish order block formed after we ran liquidity, and then we're going into a sell program, and we can see that over here. It's offering support lower, and then every up close candles, set of up close candles should be supporting price lower. You can see it here over again, right? And just keep outlining this on your chart. And this is every time you can pyramid an entry on these types of candles, right? So we know the sell program is activated. We are in the sweet spot, right, at 8 a.m. to 12 p.m. EST. Now high impact news has occurred. We already had that stop hunt. So if you were to enter on this first order block, stop loss will be above this high, right? This stop hunt. And think back about that market structure too, right? We've got that intermediate term high formed, which should be protected and not get traded back into again. So this is a good area where you can place your stop loss. Now price comes back into it again, turns down lower. We have another bearish order block formed over here. Price goes in it, trades down lower. We got another bearish order block formed, and this will continue on and on and on until we hit our draw on liquidity. Right? Outlining a few more. Bearish order block up here. Then price drives lower, another bearish order block. Price drives lower, another bearish order block, and just keep outlining those bullish candles, right? Right, we've got a USD dollar Swiss franc 5-minute chart over here, and in the previous example we talked about that stop hunt, right, and then continuation into our price action. Now we're going to talk about that discount or premium array that we will hit, and then a continuation in our kill zone, right? So two scenarios. We covered that stop hunt, and now we're going to talk about that premium or discount array. So as always, draw out your vertical line, right, at 12 a.m. EST until the end of our kill zone, which is 12 p.m. EST. We've got our daily opening line, right? New York midnight over here. And again, think about it, right? New York session is our kill zone, 8 to 12 p.m. EST. But we have one advantage when we trade this time zone, right? Because we already know what the London session has done. So London kill zone, we trade lower, creating low of the day over here, starting to break structure upwards, and we've got that LRLR signatures above here, right? So we see clear targets for London kill zone to go up, and hence we create low of the day. So we already have this information, London open, creating low of the day. Now we look for our sweet spot, right? 8 a.m. to 12 p.m. EST, continuation pattern, right? So earlier we talked about that stop hunt, but we cannot see a stop hunt right over here. But we can use discount arrays, right? So first of all, where is our liquidity? We need to know our draw on liquidity before we find our entry setup, right? So we see this LR signature up here, right? Those failure swings up here. And this is what we want to see if we are bullish, right? We want to see low resistance liquidity. So we want a high resistance liquidity run opposed to our buys, right? So over here, where do we have a discount array? We've got this low until this high, right? This is our dealing range. Why is this the low of our dealing range, right? This low takes out this low over here. That's a high resistance liquidity run, right? And then this high takes out this high. So that's how you define your dealing range, right? Discount into premium, and then we have that failure swings above there. Now we're looking for a discount fair value gap or a discount order block. We get one over here, and in the process that we move up from this discount fair value gap, we can form a what? A bullish order block also over here, right? So outline your PD arrays, so we got that bullish order block over here supporting price to go higher, and there's still an opportunity to get in next, right? Because we still form a breaker up here, and that is a second opportunity. It is still inside our kill zone, right? So important, if it's still in our kill zone, we can still look for setups unless we already cleared our drawn liquidity, and in this case we still looked for higher prices, so an entry was still possible. So we just talked about those continuation patterns, right? First of all, we have a stop hunt. And second of all, we can look for a discount array. Now let's talk about reversal patterns, right? So we have continuation pattern, and now we're going to talk about that reversal pattern. So again, two things you can have. You have that stop hunt, right? And then we have a discount or premium array where we can base our trade idea from. So over here, we've got our discount and premium levels, right? From this high down to this low. Again, we take out this low, right? So this is the low from our dealing range, and then we take out this high over here, and then we have our whole dealing range. Now we drop down back into discount of this whole range, and notice what happens down here. We've got that 1 hour stop hunt in discount of this hourly range, right? So this makes sense. Scenario number one, again, stop hunt, and now we'll dive into a lower time frame to see if we can frame our setups in our specific time frame, right? At 8 a.m. to 12 p.m. EST time frame. Right, so if you're a 5-minute time frame, right? As always, we see where have we had a stop hunt. On the 1 hour, we had one down here, right? So we know order pairing happened over here, and it's likely to reverse. Draw out your daily opening price line, right? New York midnight. As always, we want to be a buyer below this line and a seller above that line. So with London session slowly trading lower and lower, still accumulating, and notice where the liquidity is resting, right? We've got that equal highs up here. We got this equal highs up here. So we have a nice draw on liquidity to go for a bullish reversal. Now, after that stop hunt, what are we looking for? Our specific time frame, right? 8 a.m. to 12 p.m. EST. Outlining those buy side liquidity once again over here, London highs and Asian highs, right? We target either previous daily high or previous daily low, or we're gonna do those London highs or London lows or Asia highs or Asia lows. Vertical line on our 8 a.m. to 12 p.m. time zone, right? That sweet spot for the bread and butter setup. Now again, hourly stop hunt down here, right? And then we continue up higher. Now think about, we talked about time earlier, right? What is the sweet spot for a reversal? That 9 a.m. to 10:30 a.m. is the sweet spot for those reversal days. And you can clearly see over here also, we start that reversal with that stop hunt. It's right on the dot on 9 a.m. And then in this time frame, 9 a.m. to 10:30 a.m., we can spot our entry model. Draw out your discount arrays over here, right? So we've got this nice bullish order block formed after that stop hunt. So a high probability order block has been formed over here. We're inside the sweet spot. We displace up higher. So we're leaving behind a fair value gap. That's entry number one, right? Then another displacement, another fair value gap. And in the process, we're creating a order block here too. So we can see these highs over here are relatively equal, right? Is a failure swing, so a low resistance liquidity run up here, right? So with this bullish order block being formed, there was still an opportunity to get in because we did not take out this high, nor did we take out this high, right? And then eventually our longer target was up here. So this bullish order block was another opportunity to get in, and in the process of taking out this high, we form another bullish order block, and that is actually the third entry you can find to continue up higher into the Asian session highs. So small little recap, right? 1 hour stop hunt, we went to the 1 hour chart, and then we look for that specific time frame. Then we wait for a break of structure and those bearish arrays to get disrespected and the bullish arrays to get respected. And we can clearly see that over here, that bullish order block, bullish order block, bullish order block, and we keep continuing up until we liquidate all those session highs, right? London session high and Asian session high. So over here, we've got a Euro USD 5-minute chart, right? It's naked, right? We're gonna add some lipstick later, but always we start off with that New York midnight opening line. Just keep repeating that over and over again. Always draw that out, and then end of our New York session kill zone, right? 12 p.m. EST. draw out your New York midnight opening price, 12 a.m. EST. You can see London slowly accumulates below market price over here, right below that daily opening line, and then we continue up higher, taking out those relative equal highs at the start of the true day open, where the algorithm starts its day, right? And then we're talking about reversal patterns today, right? So that 8 a.m. to 12 p.m. Sweet spot, our kill zone, and we're going to be talking about what happens over here. So what do we want to be targeting, right? We're always looking for those failure swings, those engineered lows, those engineered liquidity highs. And in this occasion, we're looking for a bearish reversal during New York session. So we're going to be looking for failure swings on the low side. And we can clearly see we've got some failure swings down here. We've got some failure swings down here. And eventually we target again, previous daily highs or low, London session highs or lows, or Asia session highs or lows. So we're going to be targeting that London session lows, and then we have more liquidity inside this range too. So it's setting up to be quite a nice reversal. Now, outline that 8 a.m. to 12 p.m., right? Our kill zone, and a reversal should happen inside this kill zone. And time is very important. We're not going to look for a setup before 8 a.m. and we're not going to look for a setup after 12 p.m. Again, remember the sweet spot for reversal days, right? 9 a.m. to 10:30 a.m. Unless there is a high impact news event, right? That if there's a news event at 10 a.m., we don't look for this reversal at 9 or 10:30. We wait for news to pass and then we look for that setup at 10 a.m. to 12 p.m. But right now we have no high impact news and we're looking for a premium array, right? So we discussed the stop hunt earlier and now we're gonna discuss this premium array trading lower. So you can see a break of structure above daily opening, right? We are above daily opening price. We are in the kill zone, 9 a.m. sweet spot for that reversal day. And then we can see break of structure down here. We see in the process of breaking down, we see this bearish order block being formed and a little fair value gap down here also being utilized as support for price to go lower. And then in the process here, we form another bearish order block and price are very willing to trade lower, and you can see this displacement is pretty significant, right? And we go straight for these lows down here, which we identified earlier, right? And eventually we take out those London session lows, which is the drawn liquidity, and this is just a perfect setup for that 9 a.m. to 10:30 a.m. reversal day. So we're going to be talking about how to trade high impact news releases, right? So trading the news events and knowing when to get in prior or post the news even is crucial. So the understanding of news and the volatility injection is derived from understanding order pairing, and we went over order pairing in the core concepts, right? So in a bullish scenario, if we are bullish and the market has taken significant sell stops prior to that news session, then the news will immediately move in one direction higher to pair the orders with the existing buy side liquidity, those buy stops, right, engineered prior to the session. And if we are bullish and the market is yet to take significant sell stops prior to that news event, then the news event will have a fake move. Then they will call that a Judas swing, right, to run those sell stops in the marketplace in the form of external range liquidity low or external or internal range low, accumulating the necessary sell stops to then reverse the market, taking it higher to pair those orders with existing buy side liquidity, those buy stops resting at the marketplace at that time. Now in a bearish scenario, if we are bearish, inversed, right, and the market has taken a significant buy stops prior to those news session, then the news will immediately move in one direction lower to pair the orders with the existing sell side liquidity, those sell stops engineered prior to the session. If we are bearish and the market is yet to take significant buy stops prior to the news event, then the news event will have a fake move, right? That Judas swing once again to run those buy stops in the marketplace in the form of an external range high or an internal range high, and then accumulating the necessary sell stops to then reverse the market, taking it lower to pair those orders with existing sell side liquidity, those sell stops again, resting in the marketplace at that time. So order pairing at a news event, there are three scenarios we can look at. We have that continuation, we have that Judas and then continuation, or we have a complete reversal, so we have a Judas reversal. So over here we've got a schematic of that continuation scenario, right? We've got our premium and discount levels. Going over here, looking where the liquidity is resting, right? We've got those engineered liquidity over here, failure swings, more failure swings, and we're forming a market maker buy model in this scenario, right? So sell stops have been liquidated over here and down there. Smart money reversal down here. And then let's look, when is that news event, right? We've got that 8:30 or 10 a.m. news folder, and then we look for, did sell stops get rated prior to the news? If yes, then it's highly likely the news will just go one direction and shoot up, right? And we can see that over here. We already ran significant sell stops before that news release, and we have engineered liquidity above market price, right? So it's highly likely price will just continue up and take those buy stops and not go down once again. So this is a continuation scenario. So with that news event coming up at 8:30 or 10 a.m., right, that red folder, they want to pair up their sell stops with the buy stops from willing buyers above market price, and we can see that over here, because those were the failure swings, right? Over here, also those failure swings. And remember, all those sell stops have been liquidated already, right? So price has no business to go down anymore, and we're gonna look for those buy stops to pair up the sell stops. Now, this is a 10 a.m. scenario, right? Let's say at 8:30 a.m. we did not run significant sell stops yet. What will happen first, right? We get that Judas and then continuation scenario. So first of all, we talked about that continuation scenario, right? Does significant sell stop have been taken yet? If yes, then we have a one-sided direction with the news release. But at 8:30 and there are still sell stops to be have, then we can look for those sell stops. So there will be a fake move coming up with the news release, and we call that the Judas swing, right? So with 8:30 having a Judas swing, taking out sell stops, and then it's ready to continue up for those buy stops. Same over here, only inverse, right? A sell scenario. We've got this continuation pattern over here, and then we see our discount level here, our premium level up here, and then we're going to spot liquidity first, right? Where are the failure swings? Where are the equal highs or lows? Where are the trendline phantoms? And we can see those are formed here. So we have a basket or a liquidity pool of sell stops down here for order pairing, and then we have those buy stops rated over here, and then we were reversing before news event. So we already liquidated those buy stops before that news event, right? So highly likely we're gonna see a continuation lower one-sided. So this is again scenario one, continuation, because we already have liquidity taken prior to that news event. Now for that bearish scenario, let's say 8:30 a.m. is high impact news and we did not rate some significant buy stops, right? So what is most likely to happen? We can get a Judas and then a continuation, right? So we have over here a Judas swing with the 8:30 news event, and then we get a reversal. So we have a Judas reversal over here, right? So we're going down, we're going up from this 8:30 news event, reversing down, taking all the buy stops, and then we're continuing our way down into the real area where we want to go, which is that liquidity pool of sell stops down here. Right, over here we've got a E-mini Nasdaq 100 futures chart, right? And think about the core concepts again, right? We're dipping into a internal range liquidity pool over here, which is a daily fair value gap. So after internal range liquidity has been tagged, where do we want to go? Right, we want to go to external range. So we're looking from internal to external. So that's step number one. Now we're thinking about time frame alignment too, right? We're looking for a daily external range. So we went into a daily internal range, and now we want to go to a daily external range. And what do we use with our time frame alignment? Daily structure, and then we go into a 1 hour time frame, right? So over here we've got that 1 hour time frame, right? Outlined below down here, we've got that daily fair value gap, right? That internal range liquidity. Next up, we're gonna spot our engineered liquidity or failure swings, right? We've got a bunch of failure swings up here. So there's a lot of liquidity here, right? For the buy side. We've got sell stops down here, we've got sell stops down here, and here, and here, and these sell stops all got rated prior to that news release, right? Because we're gonna zoom in a little bit more later, but this all happens before that news release has happened, and we hit that higher time frame POI, right? So Let's go to the next one, which is a 5-minute chart. So again, time frame alignment, right? We go from a daily PD array into a 1-hour structure, and then we can zoom in from our 1 hour into a 5-minute, and then we have an even more clear picture to get in on a trade, right? So prior to that news release, we've got this CPI over here, right? High impact news. But what happens before that news impact, right? We already took out sell stops here, those sell stops down here, and then those sell stops down here. And then more importantly, we hit that discount array, right? Internal range on the daily. Now we want to look for that external range on the daily. And with all these buy stops being engineered prior to that news release, it's highly likely we have one-sided continuation with news release, right? So like this, you can anticipate price action to go one-sided, or that we have a Judas swing before that news release happens. Now, I do not advise trading CPI because you can get slipped very hard. So this is just an example. And again, I don't advise trading CPI. We've got those buy stops up here for order pairing, which makes sense, right? There's no order pairing anymore down here because we already took out those sell stops prior to that news event, and all that engineered liquidity has been taken out with that news release. Right over here we've got a crude depiction of market structure, right? So what does our eye go to first, right? We're looking for low resistance liquidity, and we're gonna look for old highs or lows which are being ran before the news release, right? So let's see, where is the liquidity? We've got this very clean trend line, and your eye should immediately go there, right? This is all the low resistance liquidity being formed prior to that news release. Now, after this has been formed, what did we do after? Right? Buy stops have been liquidated, right? So now we're gonna see at what time is the news release. Was this news release before we took out these buy stops or after, right? If we have news release after we take out those buy stops, it's highly likely again to be a continuation, right? A one-sided direction with news release, because order pairing already happened up here, so their price has no business to go down, and we have massive engineered liquidity down here, so it's highly likely news will push price down and then liquidate all that low resistance liquidity. Now, if we have 8:30 news before that buy stops have been liquidated, right, then it's highly likely we're gonna get a fake move first and then a continuation after. So think about it, right? Is liquidity being liquidated, or are buy stops or sell stops being liquidated after or before that news release? And then we can think about, is it more likely we have a continuation, or is it more likely we're gonna get a fake move first and then a continuation? So how does that look like on a British pound US dollar chart, right? We've got that daily chart over here, and again, external range liquidity, right, over here. So what is more likely to happen after we take external? We want to go to internal, right? We have some internal range liquidity down here, pushing price lower and lower and lower. We've got now a failure swing, right? And then the displacement happened down here. So we've got internal range liquidity on the daily. And now let's zoom in a little bit more. Right, we got that 1-hour chart, right? Now we're in a higher time frame POI, right? So this daily fair value gap is our area where it's highly likely that price will move down further, right? Continuation. Now let's look at where is a news event. We have that 9:45 a.m. red folder up here, and then we have to decide where has liquidity been taken already and what is more likely to happen. Are we gonna have a continuation lower with news, or are we gonna run buy stops first? So if your eye went to this high over here, that is very nice, because then we have an external range liquidity rate, right? So we have a fake move first, taking out those buy stops, because those buy stops have not been taken out prior to that news release. We can see that fake move up and then a continuation down lower, completing that market maker sell model eventually down here. And think about, we're coming from a higher time frame daily fair value gap, right? And if you think about the daily time frame again, we already had those buy stops ran on external range and then displacing down lower. So this is the highest probable PD array to go down from. So those buy stops have been liquidated. And then if we dive into the 1-minute time frame, we can see even a more clear picture, right? So think about that high that got liquidated on the 1-hour, right? It's also still inside a 1-hour fair value gap. We can see price action goes up above it, and then we're breaking structure down here, and you can see this first premium array is being respected, right? We have this breaker and then this fair value gap here. Price breaks down even further and then starts to accumulate before that news release. So we've got PMI, right, at 945. You can see this little fair value gap here offering resistance for price. And again, we already ran those buy stops, right? So order pairing happened already above market price. Now we're going to look for order pairing below market price, which are these sell stops for order pairing into buy stops. And then where is the liquidity, right? We've got these failure swings, right? So engineered liquidity, trend line phantom. So it's highly likely price action will just continue down with that news release because we're already ran buy stops before the news. Right, so over here we've got an execution picture, right? Those execution, there's a lot more execution, but we're gonna focus on this piece over here, right? We just looked at the 1 hour chart and we got that high over here, which is this high, which get ran, right? So those buy stops got run, and you can actually see a sell execution just prior to that news release over here has been activated, and then going for those sell stops, right? So this is a perfect scenario where you are aware that buy stops have already been ran, and it is highly likely this high impact news release will just drop price, and you can clearly see here that sell execution into those sell stops for order pairing and closed down here. So perfect trade. So over here we've got a New Zealand dollar, US dollar daily chart, right? As always, we're going to look at the PD arrays. Where are we in premium or discount, and what is more likely to happen? Are we going to trade lower or higher? So we are spotting some failure swings down here, right? And it looks like we're going to go bearish because we're respecting that daily fair value gap up here, and we're respecting this new daily order block, right? So zooming in, again, time frame alignment, right? We go from a daily PD array into a 1 hour structure. So we're looking at this 1 hour structure over here. Price goes into the daily order block, respects it, pushes down lower, leaving equal lows down here, right? And then we see this little swing high over here. So when we're talking about two news events, right? Let's say you have a high impact news event at 8:30 a.m. and then you have another high impact news at 10 a.m. and you see that 8:30 a.m. news event runs buy stops and then continues to decline. You can anticipate that next news event to continue its way down because we already, remember, took out those buy stops, right? So the first news event, we took out those buy stops, and the second news event, it's highly likely we're going to have a continuation. So you can actually position yourself after that first news event into the second one, and I will show you some executions later. So over here we've got that 8:30 news, right? Buy stops have been ran. You wait for that news release for price action to show its hand, what it wants to do. Do we run significant buy stops? Yes, we do, right? We took out these buy stops and then started to decline with displacement, and then 10 a.m. we've got that news event down here. So it's highly likely this fair value gap prior to the news event will stay respected and then continue down, and it looks something like this, right? Bearish order block being respected. Think about all those up close candles, right? They should support price lower once it is in a sell program. So that happens over here. Bearish order block, price rejects it. Another bearish order block, price rejects it. Another bearish order block, and that is prior to that news event, right? We displaced lower, and then you have that fair value gap down there. And this is what it looks like with execution, right? We see this buy stops have been ran over here. Price drops lower, 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 lower. This is prior to the news event. So if you have that knowledge, is there already buy stops ran? And is it more likely that we have a continuation with news or a reversal or a Judas swing? And in this occasion, we know buy stops have been ran already, right? And then this is not even risky. This is just logical thinking. And we can see this drop down here, executing, taking a partial, and then eventually closing down at this low. Perfect trade once again. Right, we've got a British pound US dollar monthly chart, right? So we're looking for that monthly drawn liquidity, which was that internal range liquidity here, right? We're going to be talking about that news reversal right now. So now, earlier we talked about that continuation and that Judas swing into continuation, right? And now we're going to talk about that news release. And now we're going to talk about that news release that will be a full-blown reversal, right? So monthly drawn liquidity, that fair value gap. Let's go into a lower time frame. We've got that daily chart right now, and what is price action doing? We're supporting over here, right? And then NFP release is on this day. So our drawn liquidity is that monthly fair value gap, remember? So go back one more slide. We are aiming for this monthly fair value gap. There is a daily order block supporting price prior to that NFP release, right? That high impact news release. And then we zoom in into the 15-minute time frame. So over here, so where is the market at prior to that NFP news release, right? It is in a premiums when we are bullish, so it's likely to reverse, right? Then there are failure swings below us too, right? We've got these failure swings down here, right? And then it failed to run significant sell stops prior to that news release, right? So it's highly likely we can see a reversal from that news release. So market will seek discount and sell stops at the release before reversing and pairing those sell stops up with the engineered buy stops above marketplace. Our NFP news candle is over here, right? And we can see it drops straight back down, taking out all those failure swings, right? And then a full-blown reversal will happen because we hit that higher time frame POI, and then finally we take out those sell stops, right? Because remember, if we didn't take out any significant sell stops, it's highly likely it will reverse afterwards and take those sell stops. So at NFP release, the market is in a premium when we are bullish. So what is more likely that it will do? So if it's in premium, it's more likely to drop back into discount with the news release, right? But there has to be failure swings below us, which is the case in the previous chart, right? And then it failed to run those significant sell stops prior to that news release. So the market will seek discount and sell stops at the release before reversing, and then pairing those sell stops up with those engineered buy stops above marketplace. Over here we have some more lipstick on the chart, right? We've got that discount into premium range, right? Before the news release, where is market price at, right? We're in this discount levels, right? Because the news release is over here and we are still in this premium area, so it's more likely to draw lower. Are there any significant sell stops being taken yet? No, they are not, right? Because we've got all these failure swings down here, failure swing here. So it's highly likely NFP will continue down into those sell stops before reversing. So now we accumulated those significant sell stops, right? We have order pairing below it after that NFP release, dropping down into the daily discount order block, and then over here we can see order pairing happening and then continuation up. So how does that look like on a lower time frame, and can we even trade this, and is there an opportunity to get in to go for those to go for that monthly drawn liquidity, right? That monthly fair value gap. Yes, we can do. We have some buy stops over here, right? For order pairing. So there are engineered buy stops up here and engineered buy stops up here. And eventually above here, right? That monthly fair value gap, which is the drawn liquidity. Dropping into the 5-minute time frame, we see those buy stops for order pairing are present. We hit that discount array, the daily order block, right, after that NFP release, and remember we took all those significant sell stops, right? So over here we're starting to break structure upwards, and then from there on out you want to see all those discount arrays being respected again, right? So we have that fair value gap over here. The bodies of the candles are respecting this fair value gap, and you can actually see it pushes up further and further and further, and then leaving this mitigation block up here, and then price finds support over here on that mitigation block, continuing up higher. And if you can spot it, we've got that new PD array, right? That redelivered rebalanced candle here. So this area over here doesn't go into this fair value gap anymore, right? We know now why is this a breakaway gap, right? Because there's a balanced price range over here already, and we can see price continues up higher and higher and higher, and then dipping one more time into this fair value gap to continue up, taking out all those buy stops for order pairing. Outlining that order block over here, right, where price action can go up from further. We've got that breaker block, or actually a mitigation block over here where price finds support. Another mitigation block up here, right, with a fair value gap. So we have coupled up these PD arrays with each other, highly likely to reject and then continue its way up.